So let's use this pair, for example, GBP AUD, right? So this is last week, but this is previous week, 2 weeks ago. So let's say we come into this market. We identify the high and the low, right? So which means we have major liquidity above and highs, And of course, we also have other lows below, The price can just take this low, didn't find enough stop losses or buy limit or whatever here, then he can go for more just to get the amount of liquidity that he needs to push price to the opposing direction, or opposite liquidity. Let's just say that. So what smart money normally do is for them to be able to sell or buy in large quantity, right? They need enough liquidity. Do you understand what I'm saying? If they are like, let's say Goldman Sachs came into the market now, right? They want to buy this pair, like let's say GBP AUD, and let's say 3 billion, or 1 trillion, it doesn't matter, of this currency, and GBP AUD, like they want to long this pair. So for them to be able to long this pair, do you understand what I'm saying? They need
Yes.
that kind of liquidity, that kind of money. You need the same amount of sellers who are willing to sell for you so that you can be able to buy in that large quantity, $1 trillion long of this thing, contract, because they use contract and shit. So now, where is the exchange, right, going to find that same amount of liquidity? That is now the question. That is why liquidity concept is so big, but basically this is the main thing. Now they know which is this. So this market maker. Do you understand what I'm saying now? There is something we don't really talk. Market maker are the people who stand between like buyers and seller. Let me just put it that way. Market makers are the people who stand between buyers and sellers. So if I want to buy right now, right? I will place my order. So market maker will take that order. They will look for exact point where they can execute that order. They are the ones seeing where liquidity lies in the market. That's why you hear they say market makers, market makers, market makers. Market maker are the people who stand between buyers and seller, or who are the people who are executing this market. Now, like I say, Goldman Sachs came. He wants to long this market, and of course, the thing is that if he long this market, it's up to him to say, oh yeah, after I take out this high, I'm going to take my profit. And before he takes his profit, that means he has to get some sellers that wants to buy from him. You understand what I'm saying? Like willing to collect that order so they can sell it. This is just how the market is. Now, like I marked out this weekly area, right? Now, this was previous week, and Goldman Sachs came into this market like this. It's okay. Now, I'm trying to long this market. The market maker will say, oh, how many contracts do you want? Okay, yeah, I need $1 trillion, something. Then they will go, no problem. Place your order. Then they will place their order. Now it's left for market makers to find where liquidity are. That same amount of money, that same amount of order. That's what they are looking at. So this being a low, or this being a low. Now, if there are market makers or maybe people who were even buying this market up, they still have stop losses around somewhere, or other people which are like these people like Gomosas who came to buy, probably market maker place their buy order around this level, then they will not push the market down because they see what is going on in the market. They will not push the market down to this point to get this exact amount of that order that Gomosas were looking for around this level. Then after they collect those order, you see market will now move. Wow. Where they want to take profit, it could be anywhere within this range. It could be the 50% of this candle. It could be the high to take out the high, liquidity again. It could be anywhere in this market. That is what they basically do. Now, if we will go down to, for example, lower time frame or something, you probably may find, I don't know what will be around this level. For example, I don't know what will be. You probably may find something such as like maybe key level. Now, first of all, here, this was the previous week. Price took out, went up, take some kind of area right here. We tap into this open and close level. Then what do you see? Market sold down. If this is where they place their order, market sold down to collect this order. And you know what he did right now? He first gave people opportunity. Now he's enticing people to get into this market, right? This is how they build liquidity, by allowing buyers and sellers to participate, especially retailers, So price took out this low, bought up, were up to this point. What happened? Because remember, the people who bought this market from here, they put stop losses right here. So now, what happened? Market bought up to this point, price came back down, took them out. Now you see price started going. Does it mean that your initial analysis wasn't right? It was right, but you didn't just understand like the terms liquidity, and this is the reason why you get stopped out and later price started moving your way. So that is basically what it is. Now, what do you see? Previous low, week low has been taken. This is the major liquidity pool. Now, probably price is aiming for previous week high at the opposite liquidity. But following the trend, you have to know the trend, So if the trend is saying down, probably they are not going to take out a high. They can just use like previous day highs and all of this to continue the trend wherever they are going. Like take out the low, the high of that day and continue the trend. That is why you see like the most important area of a candle is like probably the 50% highs and low, of course, open and close of those candles. They are very important. 50% of a week or something. But do you really need to have all of this in your head? No. All you need to do, you already have a lot of ideas like, okay, yeah, this market is looking for liquidity to buy up or to sell down. So where is liquidity going to be found? You already know where liquidity is going to be found. Okay, let's say now, what about the people who are buying this market? What about if they are not willing to take out the previous high or low before they offload their orders? That is when this 50% of the range comes in. You are not looking for different places that these people who are long in this market may be likely to offload their order so that you will not get caught at the end. See, just something like this. Let's see. Um, Here, what happened first? We took out the low, we started buying, we bought to where? The 50%, which is the open and close level of this thing, right? Now, what happened? We sold down. Now, clear more liquidity. What liquidity are we clearing now? We first off take the previous week low liquidity so that we can be able to buy up. We need liquidity we need to take, sellers for we to be able to buy, and we need buyers for we to be able to sell. Just basically just the same thing. And now, we first of all take our previous week low. We went higher to the 50% open and close as well.
Wait a minute, Andrew. So you just filled just that one candle on the weekly candle to
Yeah, just
okay.
This is Do you need to feed this candle every time? No. But this is like just to stay alert. Like if price is reacting of that 50% of that candle, that means price has reached equilibrium, or basically they have agreed on like, okay, yeah, something like this, or there are like orders placed there, and this order is way much than the buyer's order, so they will overturn the market at that point. Those are just area where you need to keep in mind. Like, for example, you bought from this low, now you are thinking, yeah, price is going to that high. You bought from this low, now you're thinking price is coming for this high. What about if they find something along this way? Yeah, sellers, or around this way, what happened? They will turn around here. So instead of you like putting all that hope here, like it's coming all the way here, you can also look at other area in the market. That is just what it is. Now you see, after taking out these people again, now you see market bought up again, reacting off that level, the same level that it react off before. It came there again, react off that level, started selling. So it's just something that you just need to keep in mind. But do you really need, yeah, it's coming here, it's coming here? No. That day, it might not even come to the 50%, it might just come for the high. Liquidity is basically what they are looking for. And you as a trader, you cannot just say, yeah, this is where the liquidity is that, yeah, we are coming for. You can be able to mark certain area out here. There is liquidity here, there is liquidity here. But where exactly they are going to turn it around is like, you cannot just predict that. How will you know is when price is reacting off that level. And the way it's reacting off that level, that is how you will know.
Yeah, Andrew, please, are you recording?
Yeah.
Okay, sir. Thank you.
So this is what it is. Again, this market is all about liquidity. Like it might be tough right now. It might be tough right now. You might not understand a lot of things right now, but again, you need to put in work. You just need to, however you want to figure this out, you just need to put in that work to figure it out. It's all about liquidity. What is liquidity again? It's money. I want to buy 2 trillion. I want to long this market for 2 trillion contract or something. Now, where can I get that 2 trillion amount of money to be able to execute this 2 trillion orders? That is why they are looking for the place where money is in the market. At that point, if they can gather that whole 2 trillion contract, then they will execute that order there. That is why those points of interest are just those areas where there are like either stop losses or buy or sell orders. But again, you just have to think deep. You have to think deep. One side of the people are going to get clapped for sure, for the other people to execute the order. If we are dragging, I don't know. Let's just say I have like, you have money, I have money, and we went to auction, right? So we're bidding for like a Porsche or a Ferrari, it doesn't matter. The highest bidder will be the person that is going to get the auction is going to get sold to, right? This is how it is. The only difference is that, yeah, in that case, like when you were bidding, of course, your money is not going to go along with it. It's just that they win you on the race, on the bidding. That's the only difference. But in this case, for sure, one person is going to get clapped because they will take that person's money, add to this one's to move that market. That is how it just is. There is nothing different. It's just two people fighting, and the one that has most money wins the race. and they will take the other people's money out to this money to move this market to where they want to move it to. This is how it is. It's all about liquidity. I want to buy 50 pair of shoe. I can start buying them from different retail. Like, okay, you have like 20, you have 20, you have 10. This is how it is. It's about liquidity. It's it's a concept that is difficult, hard to understand, because the most difficult part, especially, is you will see price is bearish. Now, what the price needs to do, right? What the price needs to do, first of all, let's say we need to pull back to continue bearish, right? Now, you will see price, instead of price to pull back before continue bearish, if you pull back a little bit, then continue. What happens again? Later, it will push back to that dip, then it will continue. This is how they are manipulating, like collecting buyers' money, sellers' money, buyers' money, sellers' money, just to be able to get that enough money to execute that big order that some banks or some institution placed in the market. This is why they are doing all of this. And who is doing this? Market makers. These are the people who execute these orders. If I want to sell right now, market maker will be the one to find like buyers that is going to buy from me because I'm selling. And if I want to sell, buy right now, market maker will be the ones to find seller who I'm going to sell. Like when, of course, I'm buying, right, or whatever, who is going to sell for me so I can be able to buy. Market, yes, it's difficult. We understand that market is difficult. There is no doubt about that. Market is really difficult. But this market you are seeing is doing the same thing again and again and again. It's a pattern. It's either it will do the pattern it did like 2 weeks ago or something, or it will do the same pattern that it did like last week. It's a pattern. You just have to follow up that pattern. And you, like I say, you will see most time we are waiting for price to just pull back because we know the liquidity is below here, right? Now, what the market will do, this is what you are expecting, pull back before we take out the liquidity. But what the market will do eventually, the market is like this. You just want to pull back. The market will first of all take out that liquidity, then pull back, again, take out that liquidity before we will start going higher. How many? It gave people a chance to buy here. What happened? People buy here, put stop losses here. It take that stop losses, and people who were selling here will now pull back again, take out the stop losses. Now we now sell to again before it will continue that original move.
Hey Andrew, how you doing?
I'm good.
I had a question or two. I don't necessarily have to share my chart, but I wanted to know if we could go over US 30, and then I just had some questions about trading at the all-time high.
Okay.
If
We
that
will,
is
we will,
something that
we
you
will
are
go
covering
there.
today, because
We
what?
will go there. We will go. We will talk about US 30. We'll
But
talk about US
I mean,
30.
okay,
Mm-hmm.
I guess I was just asking too, just about trading at the all-time high in general. But yeah, okay, I can wait. I just was, yeah.
Is US 30 on tie high now or what?
Yes, it is. And I mean, I have
Nasdaq
some
was
spot.
selling.
Sir,
Nasdaq was selling. Why is US 30 not tie high?
because it's divergence.
Okay. I didn't look at US 30. I was just looking at NAS. for rules, so I didn't
But
know.
I could show you. I mean, I could share my chart, but
Yeah,
yeah,
later you can
it
do
reached
that
up.
later.
Okay.
We'll do that later. So Sherry,
Thank
do
you.
you understand what I'm saying?
I do, and
Yeah.
I appreciate you breaking it down. I do. I understand.
So
Um.
yeah,
So basically, once I mark it up, I'm not trying to wait for the extent of that loan. It's just where the liquidity is sitting at, and then watch
right.
my points of entry near those areas.
So now there is another thing, right, which is earlier participant. So that earlier participant is like the people, yeah, of course, market is going to pull, pull back or something, right? But that pullback, that original pullback, right? You may stay sometimes because if you jump too early, now market is just building liquidity at that point. You might get stopped out then before the original move will occur. So again, liquidity, because this is what they are trying to. They are just looking for liquidity, whether sellers or buyers, before they will execute the big order. And without nobody needs to tell you this, right? This big order, I'm not going to say it's mostly executed in New York session or something. No, we cannot just talk about that. But we also know that, yeah, most times it's from New York session. You shouldn't just conclude that, yeah, it's only executed in New York session. No, you cannot conclude like that. But most times it's like that. Now, how do you know? How do you know now? You can see like Asia or London can be moving anyhow. There can be a distribution still, but you will see when that big order is being executed, you can see the momentum, the kind of volatility that comes into the market. That is to tell you that every liquidity they have been looking for, like I say, we are about to execute 2 trillion long or something contracts. And what are we doing? We are looking for where we can find that 2 trillion in cash to execute that order, right? Now, we have collected both buy side, sell side, whether retail or other institution, which is not even up to that highest bid of the day, right? Now, after collecting that 2 trillion, it's time to execute that order. That is when you see that volatility will comes in. Like, this is how it is. This is just GA, I'm just using for like, example or something. So now, I don't have a play on this thing. So look at this. This was a bullish chart, bullish candle right here. What do? We know highs and low are liquidity, right? You see what market do? Market open right here. It first of all came for the low, took out the low, this and this. Now, it later trade higher to take out this what? High. But it takes like what, 2 weeks? 1 week, rejected up here, the other week completed the whole wave. Why some week, you see, we only takes out like sometimes just a low, but not the high. Because around the middle or something, we find our support or whatever liquidity we are looking for or something. Let's just put it that way. It's different. And market do the same thing. Like I say, not every time you expect a high and low to be taken. We can just take the low, trade back to 50%, then continue going that way direction. We take a high, trade back to the 50% like a pullback, then we continue that high or something. It's just the same. Why sometimes we need both highs and low to be taken. And if price takes out both highs and low, that is like, we call it outside buy that way. We take both highs and low. And now, where are we going? Because we have taken both the low and the high. Are we going to go back to the low because we took the low first? Or are we going to continue going higher? You know, this is thing. There are patterns that repeat themselves. They repeat themselves every time in the market. Every time. So, you know, yeah, like I say, liquidity concept is very difficult. Market itself is hard because if it's not hard, everybody will be making millions in the market. Everybody will be making millions. But yes, you can make it easier for yourself. Taking the information, putting in the work. It is difficult, for sure. It is very difficult. But come on, like we are working for somebody, right? What, how many hours? 8 hours or 12 hours? We are working for somebody. So if you really think about it, that 8 hours working for somebody is like you are now going 8 hours back of getting to where you want to go. But if you put in that 8 hour in your chart, that means you are eight hours ahead or closer to where you want to be. You know, it's all about time and focus. You need to push that time in this thing for sure. You need to put in that time. So like we were saying, you know, like price took out this low. Remember, we need to find, like I was saying, Sherry, there might be some point of interest around this level that price might use to get price back up. You just have to look for it, whether from the daily or 4 hour. For example, you can see when price did move down, in this case, we took liquidity out from this level. Then we have a shift in market structure right here. You know, then like however you want to put it, it's a lot of things here. You can mark out just this candle, for example, right here. Just this candle, you can mark out the open and close of this level right here. Your choice is you can mark out this fair value gap like this. Those are areas where you can use for yourself. Okay, yeah, I'm going to look for my point of interest around this level, something like this, and or look for buying opportunity from here, something like this. These are things that you can look for yourself just by understanding. Okay, yes, price needs to go up, it needs to come down, it needs to go up. But yeah, you already understand what we are doing. From where? From the weekly perspective, you know. And yeah, not every time price needs to pull back either way, but you give it a try. If it's not going to pull back, then you're not going to see any confirmation. It's just going to run through your point of interest either ways, you know. So this is how it is. And now, let me even complete this thing to see. Let's see 4 hour. So let's say we just have this point of interest right here. It's OC level. Or you can use this one as well. This V-shape level, it doesn't matter. It's your choice. Now, where was the last area price came from? Where was the last area price came from? You can call it this area. If you want to use this one, we haven't break above that high, but you can call it, I can say this high, you know. It doesn't matter because if you go to your line chart, of course, we are already closed above it, but it depends, you know. If you want to be using line chart, you can see this is the break. And where is the last low that broke this structure? Again, this is your choice. If you decide to use this, if you decide to use like, I'm going to use, like if you are using like your other block or something, you can use this. Then what will be this? This will serve as liquidity here. That low will serve as liquidity. If you turn to your line chart, and the low is even here all the way. So there is no, it's not like it's not possible, but there is no way except if price is going to come back down here. That is how this low here will become your liquidity. But deep down,
Well,
this is
pause
the,
your screen. Wait a minute. Pause your screen right there. I'm
yeah.
getting ready to use now. Okay, so while we right here,
Mhm.
to my question would be, so until we break and close below this, don't look for anything down in this area, correct?
To what? To sell or to what?
Lord, let my mind come. Not the yeah, to be able to start looking for a sale. Would that be your area because that's where we are currently,
To, to
or
sell, you mean to sell, right?
uh-huh.
So to sell, you don't even need to sell from here, right? Because now, if price will break below this level, eventually we might break below this level as well, or it doesn't matter. If it didn't break below this level, but we break below this level,
Well,
then
that's exactly what I'm meaning because I know
yeah.
there's a lower level there.
So
So
now,
until it
now,
breaks
yeah,
there,
yeah. If price will break below this level, right? That means we were probably coming for this low here, this liquidity. So for you to sell, all you need to do is for you to wait for price to return. I don't know which level it may be, but you just wait for price to return back to the level that broke this structure. So you can target from that level to this low right here, something like
got you.
this.
So it needs to actually break the structure,
Yes,
then look for it to come back to that level.
yes. Because right now, this is a level that you need to be looking for buying opportunity from to what target this, all of this liquidity right here, all of this, probably to the upside. But if you fail, like for example, let's just do the way we trade. Here, 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 it doesn't matter. And now here, it doesn't matter. If you want to use this area, you can use it like this, but it doesn't matter. Let's take this one out. So we are using here. Now, this is the 4-hour level. For you to know if this trend is valid from here back up, so you are looking for 15 minutes change in market structure or shift in market structure. Now, at what point price came here to this level? From here, this is the level where price came where? Down here. So you can wait for price to break that level. That confirms a market structure shift to the upside, whether here, it doesn't matter, but that confirms a market structure shift to the upside. I know in this 1 hour, if you want to use here or you want to use here, here was broken, but this high right here wasn't broken. So, but this is where price confirm the shift. So, which means just to be like, safe or anything, you need price to come around this level for you to take the buy up like this. You can put your stop loss right here because once price, let me see, stop loss. Once price invalidates this level, like this low, then this trade is not valid anymore. Why? Because price broken this low and probably we are coming for this low. That is why you have points of invalidation. Of course, you are using your risk management very well, which is stop losses and like, how much you are willing to risk on the trade. But if it tends to like play out very well, it comes here and triggers you in, then you already know where we are going, where we are targeting, basically. Now, you have a box to check, right? Your box to check is where? Do we have a 4-hour shift in market structure? Yes. Do we have a 4-hour point of interest? Yeah. Where is the 4-hour point of interest? Again, this is if you want to use this one like this, price came in. However, you want to use your 4-hour point of interest here, price came there. If you want to use this level right here, this is the last low that shift this market structure. Let me just take this one out. Right there, you can mark it out as what? A V-shaped level, open and close. Now, if you watch the price action is very, very important. Look at how price action came down to that your point of interest. Price created a low, a high, a low, a high, a low. After getting to your point of interest, price shift market structure. So what are you waiting for? Price to come like this and continue going higher. This price action is a very healthy price action. There are some things that you see price came straight like this. Most cases, price will come back to the 50%, then push down more before they will go or higher. But when you see price action like this, creating higher high, lower low, lower highs, lower low, lower highs to the downside before shifting structure, you can see right here, this is where structure was shift. There. I mean, this is the 4 hour, Then what are you waiting for? You wait for price to come back to your point of interest. There. Now, you have, let me just here. You have this level in this 4 hour time frame, but in the 15 minutes time frame, what did I use? I used this series of down candle from here. So even if price deep down into this one right here, this V-shaped level from the 4 hour, 4 hour time frame, we say higher time frame levels are always best, are much better. So even if price come down to the 4 hour level right here, you are still very safe because this is what you are, like 30 pips is what you are risking. And if price will take out that low, then it invalidates your trade. That's it. Everything, your boss was checked, everything was correct. So if price stopped you out, then something we are aiming for lower liquidity. Again, market makers. Let's see from the daily. Let me just shift this thing here. Let me see how the daily looks here. Boom. And now, so looking at last week, and I'm not last week, Friday created indecision candle, right? Inside bar candle. So this is accumulation, basically, on this daily time frame, right? So what do we expect? We expect an expansion to the upside or to the downside, doesn't matter. But looking like at the market, like what price did, so I would like expansion to be to the upside. And this candle right here, this daily candle, the low is liquidity, the high is liquidity. We all know. The way it's huge. I like it. So again, price can stop, like come down first before going higher. But looking at what really happened throughout last week, I would prefer price to pull back down in any of this level and continue going higher. This is this candle high, but this is like that previous week high. So whether we will get here, we don't know. But at least to take out this high and probably continue moving down to take out this low. It's possible. This high was the first high created after this break of structure in this time frame. Right there, break of structure. This was the first pushback. And usually it's always liquidity, which is this high right here. So I wouldn't be surprised price take out this high, come down, take out this low, whether to continue higher or, or we can just take out this high and come for this high before we decide to sell down, whether from the market structure perspective, bigger time frame, weekly. Weekly, that we haven't really done much, We haven't like taken out this low. This is the last low created this high. So we haven't taken it out. So, but like we're talking about candlestick body, yeah, we have taken this low out, which is, I prefer candlestick body sometimes, and again, every pair is different. Why sometimes I prefer like market to take out both the wicks to completely break. And that is what I prefer the most, But sometimes when there are enough liquidity in the market, again, you don't need to wait for all of this sometimes for you to be able, once price come to your point of interest and it gave you what you wanted to see, so automatically, if you change it to line chart, it has broken and price came to your point of interest during that time. Let me just see, that here. Let me just mark this out. Here, for example. In this case now, in this case, where did I mark out before here? Look at this level. Look at this level. Now, price broke from line chart perspective. Let me make it bigger. Price broke from the line chart perspective. We had a pullback into that level. There, here. That is why price react off that level. See, price react off here, so down. Price came here again, so down, you know. In line chart, you already see that price has broken that level. But in physical chart, it hasn't breaking that level yet, like with candlesticks. So those are just preferences. I always speak about this. The pair you are trading, you have to know. Like, you don't expect somebody who is teaching you to tell you all of this. That is why you choose a pair that you are trading, and you looked at this pair over and over again. In the long term, you will understand, okay, if I switch to line chart, I have a break of structure already. That means it's a confirm for me, like it's a break of structure. I don't need to wait for me to see candlestick close below wicks or something of that structure for me to be able to take a trade. You know, these are things you have to work on yourself, not the trader, not somebody who is teaching you. Just it's a lot of things you can. I mean, you are completely, yeah, I haven't started like making money here, or I haven't understand the market, or I keep missing trade or something. You know, those are the little things you haven't really pay attention to, you haven't really worked on, especially the pair you are trading, you know. So again, why having 3 pair or 2 pairs or 4 pairs when you can just put all that work in one, just to make sure you understand all these little details about that pair.
Thank you. I understand.
So it's always like this, you know. GA is a pair that I traded, you know, over a time. Like I say, me looking at this, yeah, price took like point, like price came into this area right here. What did price do? React off, price started pushing higher, you know. You can see at this first push high, price didn't react off this level here. Where is that level from the 4-hour perspective? You know, where is this level? Where did price react from? Let's say you can just see first this fair value gap or something, you know, and look at the where price is coming from right here. When price got here, you know, react of this level, came down again, took out this low. Now react. Where is here is the level that took out this low. And if price break that level, it becomes a shift. And you can see that same level, when price came there, I know we broke it in body, but automatically you can use this as a whole area. What did price do? Price react off, sold off, then price broke it. You know, it becomes a total break. That is why this is like price flipping. You know, we're having something like this. So price came here, react off here. Instead of price to create a new low, it creates a higher low, lower highs, then higher high, higher low for price to probably continue going higher. What? At this point, we are aiming for higher liquidity because there is a reason why price, when price came here, it didn't break, create a new lower low. It created a higher low, then higher high, probably a higher low for price to continue what? To seek some kind of higher liquidity. And those liquidity could be from previous days highs or weeks highs, you know. So this is how it is. Let me take this one out. So like this first reaction for sure, like I say, I would like to see price take out that high. Probably take out this one as well. Who knows? This weekly, previous week high. And we have what? A level here that has not been mitigated right here. You can take all of this. And now, if you look at this structure very well, you can see in a bigger way, we have all of this wave and we have all of this wave. So maybe we are having a deeper pullback to create another wave like this. So you can see big time, we did broke below all of this structure right here. And how did market came? You can see market came beautifully high, low, high, low, high. Now we are about to start pushing. So first, for we to know if we are getting there, yeah, I know, we need to see area God's broken. Because this one now we have already confirmed a break. So which means we have a structure. Where is the structure? This one right here, this swing like structure. So if you fib, you can see we need to be looking for buying opportunity because we are in what? Discount. So above this yellow line is the 50%, which means we are looking for selling in the premium area. And we have a point of interest where that has not been mitigated right here. So which means previous week high we were looking at is a probably point of interest that price needs to come tap into this level and what's run down. Like I say, you can see from the weekly as well, price did broke this low. So we need a pullback, even if you feel, like I always say, it's almost the same area, And where is the point of interest? We have this A level, and the one we also figure out from this daily level. So these two levels are very important. If price wants to continue selling, probably we will see a deeper pullback. This high being taken, the liquidity that is resting below these key levels right here, these levels. So it's just something to put in mind. Maybe we are not trading GA or something, but I'm just saying like this is something that likely happen because looking at this area, for our perspective, we see when price was creating this high right here, so we have a level that didn't get tapped and price just tapped it now. We started seeing a shift, and this is the same level from where the daily when we say we need to see a break above. Probably again, that's why I'm looking for a buy opportunity for price to today market is going to open for price to come like this, probably buy to confirm this break here. So after this break, maybe we can see a pull back down again. Like I always say, before we will do something like this, like I explained earlier, So this buy might just be a short-term buy that is going to confirm a break. Then we will see a pullback that is going to come down into the discount more to confirm that. At that point, I don't know, maybe around this level, then from there we can start seeing that push up to this level. This two level that we have. So it's just something that you need to pay attention to or put an eye on. Just the same thing, liquidity again and again and again. So yeah. And let's talk about GU. First of all, we're going to start from DSY. DSY. DSY is bearish somehow. And then we have this liquidity that is sitting here. We have this one that was taken first. Price is pulling back down. And we have a key level right here that we don't know if price is going to react off. And we still have like a little down movement before to this key level. Now, looking at the structure from this time frame perspective, and we did have a break right here, and we have like minor structure to the downside, created this overall low here, and we had a pullback to some point of interest. Now we are now coming whether to create a low more or to sell into the discount of this wave and continue going higher for higher liquidity. For example, where is the discount of this wave? Below the 50% or the 50% itself. We can get a discount of that wave around that level to what? To fuel market, for example, like this, to continue for higher liquidity, or we might just see a movement from the premium of this level down to create a new low. Basically, it's the same thing. So now, looking at this wave like this, we are already in discount, right? Now, again, that discount, you can see from the monthly price frame, we have a level here, right here. Now, we are now in discount, but this is a level that price can react off discount. Now, when price came to our premium from this level perspective, you can do like this. Doesn't matter. When price came like this, from this weekly perspective, then we have all of this anyway. We haven't really gotten to this area in the weekly time frame, for sure, no. So we still have a little bit of offside to go, but in the monthly, we have a level right here. So monthly is more superior, but still. Now, looking at this time frame, we have this weekly level, and we have price took out some kind of liquidity right here. Price failed to close above that high. So what price did? Price pushed down to break this low. It's kind of confirmed something like a shift in market structure to the downside. From where? From that premium area, that price, we are looking for price to push down. So this level can serve as a retracement level back into this level and continue going down for where? For this low, and this is kind of relative equal lows, and we take it step by step either ways. But here, this is a level here where price can react off, push back up a little bit and continue going down, or even push back up to where? This level before going down. So this is what I'm looking at on what is it called? On DSY. On DSY, this is what I'm looking at. We still have a little bit of down momentum. You know, we have this level when price broke this high. We have this level, price pushed down. We didn't really do anything. Now price break this high again. Now this level, did we take any liquidity before breaking this high? No, there was no liquidity taken. So which means this low will serve as liquidity for sure. You know, so for this low is going to be taken. This is 100%. This low is going to be taken. And if price is taking this low, he wants to take shelter or take support or something, he can't take support from here, push up into some area, I don't know, then continue going down. And we have some area right here, inverse fair value gap. And this area, we also have a key level right here, because this is for sure liquidity, and this, we have a level right here that price can react off. I mean, even here itself, price can react off, or this OC level, because this area, this one should be liquidity for sure. Previous week high and low, and this OC level is also here, right here. So, you know, price can react off this level after taking this liquidity, then go higher, react off, and continue going down. This is something that can happen on like the DSY. It's something that can happen in the DSY. This is liquidity. So yeah, and this area is aligning with this inverse inversion fair value gap, and it's a nice one there. So which means if we're expecting a down move a little bit, what does that tell you? GU and gold may be buying for a little bit before selling. If it's going to do like this before buying, it means GU is going to go like this before selling, basically. So now let's go into GU. Let's go into GU. So let's take this one out. This one out. Coming into the weekly time frame, what we see here is that price failed to close above last week, which is last 2 weeks high or something. This signals like a real liquidity grab, and price react off a key level from the weekly time frame. Also took out from this line chart, we also took out this area, but yeah, it react off this level before pushing down, failing to close above this level. Now, I've seen something like this so many times. If GU even want to sell back down, we have a weekly fair value gap, which means we might be looking for rebalancing. GU might, first of all, what? Buy up, take out this high before selling back down to take out the low. And I don't know if it's going to be the same week, this week or next week, to continue this buy up. Again, like I say, DS market just opened. Yeah. DSY is likely to what? To first of all, sell down, which means you need to buy up, sell down, you need to buy up. Then before buying, while buying, you need to start selling. Again, buy up, take out this liquidity, sell down, then DSY will be buying. Then when we get to this area, then it will be buying, then DSY will be selling. Again, what happened? Sell down, buy up to this level, then sell down again. So this is something that I'm looking at on GU. I think we will first of all buy up. Now, where were we looking at buy? I was on this thing with Vasi on, I think it was on Thursday or I don't know. I think on Thursday. There is this level I was looking at, OC level. On Friday, react off that level very well. This OC level, when I was on call with Vasi on Thursday, I think so. No, one of the, yeah, I think on Thursday, I marked out this OC level and this other level right here that I want to see GU react off. Like this. So what happened? This area is a previous day low, and this was previous day high. So when we close like this, what did price do? Price failed to close above this. I told him that I want to see GU sell down, react off this level. We also make measure of this, but I refine this level in the 4 hour. This level is still the same, it's correct, it doesn't matter, but I refine that level in the 4 hour to what? This level and this OC level. So I literally choose the OC level. Even if all of these points of interest are correct, the price react off there, but I just stick to the OC level. Why? Because it has a better risk to reward in that ways. Now, this area is the 4 hour level, right? So I expect price, like I say, from the DSY and all of the, I expect price to buy higher, take out this liquidity first, probably, before selling back down into this level. Now, this is a 4 hour level, or we can decide to say, let's just say we have a daily level and a 4 hour level right here. So which means any 1 hour confirmation, 15 minutes confirmation is enough for us for this buy. Now, this is the 1 hour. In the 1 hour, there is something we saw here. We have an evasion fair value gap that price created, didn't close below right here. And we have also a fair value gap the price tapped into has failed to close below, which means price is telling us market needs to go higher right here from the 1 hour perspective. But if you are looking at structure, did it change market structure right here? With body, yes, but with candle, no, not yet. Let's go to candle. Candle, not yet. But I mean, if you say change the state of delivery there, it did. But we have other point of interest that we did use to do this thing. And look at this market. After price has tapped into this, let me make it bigger. This daily level, this candle here, this black candle, and this 4 hour level, which in the 1 hour you have a clean area. This area was what open and closed in the 4 hour, but in the 1 hour, look at it. It's a clean order block right here. Now, what happened? A 1 hour candle engulfing, disrespecting this invasion, this fair value gap to become inverse fair value gap. So these are like area for you to know that price needs to buy. Now, let's go to the 15 minutes time frame for this 4 hour level. In the 15 minutes time frame, where is the area? We have a high here, a low here. What happened? Price has shifted market structure right here. Right here. So if you want to extend this to become your key area, the price tapped into that level yet? But we have a huge fair value gap right here. The price is also reacting off. So like I say, it's just the same thing I'm saying. Price will literally buy up, take out this high before we will see that sell. If price wants to sell according to DSY, but because DSY needs to sell that now to take out this low somehow. So which means GU gold, they need to buy up to take out some highs, So it's just the same. I'm looking for buy either to take out this high before selling or probably buying and continue buying, depending on what DSY is going to do. So this is my analysis on this. But this, I did mark this out with vaccine since last year, like on Thursday, last week. We were saying like price needs to take out this previous day low and come into this point of interest from the daily or the 4 hour. So, and price came there, react off there beautifully. You can see the 1 hour and the 15 minutes did give us a confirmation. Like I told you guys, I use fair value gaps and fair value gaps to take a trade or market structure shift. It doesn't matter, but yeah, change the state of delivery as well. So those are the things I looked at when price react off my key level or my point of interest. So I'm looking for price to give me any of these for me to be able to capitalize on the trade. So it's just the same thing. Wow. What the hell? Man. See from here, price open, what? How many pips? 35 pips.
That's a huge gap.
Very huge, like 35 pips straight away. Like I say, I'm looking for buy on this way, either to take out this high and all of this high. But, it is what it is. If it comes down to get entry, if it doesn't, I mean, it's okay to not get trade sometimes. But yeah, this is what I'm really looking at on this GA, if I'm going to trade it anyway. But yeah, and of course, GU, I also want buy. It has already opened around this level. And with what I just explained, it's just the same thing. And anybody has a question before we go into another pair? Any question? Alrighty. So gold, it's not a new thing. What? Wisdom. I'm not hearing
Yes, sir.
you, Wisdom.
Yes, sir.
What do you wanted to say something or what?
On GU,
Yeah,
on GU on the daily time frame,
right here.
yes. Though the weekly was saying that it's going to sell, but when we look at the daily, it's saying that at least it needs to buy a little.
Bro,
right?
I've seen this thing so many times, man. I know, like on a normal day, we'll be looking like, okay, price to sell. But again, I make this thing clear to you guys. Liquidity. I know. This is something maybe you guys don't pay attention to or don't respect, This is information. I kept giving you guys this information. For price to be able to sell, we need buyers, right?
Yes,
Which means buyers, let me just say, who will place buy limit above this high, they are going to take their money because automatically they have like stop losses here or something. You understand what I'm saying? So for market, for institutional trader or smart money, for them to be able to sell in large quantity, they need buyers. And for them to be able to buy in large quantities, they need sellers. This is just the same thing. This is the same information I keep passing every time. So it's not a new thing that he needs to buy to take out some liquidity before selling. And
I follow
yeah,
because I follow what you're saying. But I'm trying to say that, but for you to get to that buy and that point where you want to buy from, I'm
yeah.
suggesting that maybe it's going to take out some liquidity before you buy and even try to sell again.
Okay, now let's say we're going to take on some liquidity before we buy, right?
Yes.
And last week, remember, we've taken previous week low and previous day low. That was the liquidity to get to this point of interest, right? So what about they have already executed this order for price to keep flying up to this point? This is because there was liquidity sitting here. We see this. That's why I told Vasil, oh yeah, we need to see this load run into this level, then start buying. But unfortunately, market did that late hours of the day before market closes. So for people who were already in this trade, what can they do now? They can just sit and relax for trade to play out, So it's just the same thing. And I understand what you are trying to say. Yeah, we need to take out some liquidity or something for we to be able to buy up or something. Yeah, if you are looking at this market, right? This market right here, we identified this line, and we have a low right here. Probably we might come back down. This is the differences because if you will execute your trade from here directly because you know what it was going on, you have no fear. Because even if price wants to pull back down, the least he can do, he can pull back down to this area and continue. Your trade is still very, very safe. Do you understand what I'm saying? So this is just the differences. So it can pull back down to take out this minor low because in the 15 minutes time frame, when we have a shift in market structure, let me take this one. We haven't tapped into this level yet. We haven't tapped into this level yet. So it's okay to come down and take that, and we have some kind of fair value gap and inverse fair value gap right here. But the trade was executed here. So anything that has happened, as far your stop loss that is below here is not taken, you are very good. You are Gucci to go, So it can just give you more opportunity to add more to the trade. Let's just say something like that, So it's the same thing. And like I say, it will not come back down because these people here has already been in this trade and we are just going to fly up, take out that liquidity before selling. It's just different.
I really, when I did my weekly and go back and did some back test, I really saw this spot now that you're looking at. But why I took my mind off this spot because it was supposed to distribute before the previous day closed, right? And as the previous day closed, I felt like price might have to come down again and like take liquidity again before even going up. That I said, okay, since that previous day has already closed and a new day is coming up, which is today, I just felt like, okay, let me see if I'll see another opportunity, which I have on my chart now currently. So
Trust
either
me,
buy.
you are not wrong. You are not wrong, You are not wrong at all. But the thing you can do is sit down and relax because you already have a plan, right?
Yes,
Your
sir.
plan is to watch market come back to where you want market to come down to. But if it didn't, it means that it didn't give you the opportunity, right? Now you are waiting for another kind of opportunity. That is how it is. You have nothing to lose. Even
Okay.
sitting down, not trading, is part of trading, is part of experience learning, you know. So those are things you have to be okay with. Like I say, for me, I know this market is just going to keep buying for sure, you know. Oh my God. See this. If it can pull back to this level, I think it will be okay for buy opportunity on this. But yeah, so these are things you have to be okay with. And yes, it didn't give me opportunity to trade there. I'm okay, you know. So like this, you are also learning. You are not wasting your money or anything, but yeah, you are also learning. And gold, of course, do I expect gold to come down? This is a level. Gold will probably take out this all-time high before selling again. Might probably take out that all-time high before selling again. You know, so just the same way DSY, like I say, we need a bullish market. And if you look at this level right here, we didn't quite get here, but what we did was the tip of this candle right here to rebalance this imbalance completely right there. In the 4 hour, we have a fair value gap around there, you know. So I know people are like, yeah, gold needs to sell. He can sell, but is DSY willing to sell like this straight away, buy like this straight away? I didn't see it. So I know gold might be just accumulating like this, and take off now, you know. So you have other pair to even look at trade better than on gold right now. You know, gold, I think it will take out this high right now before it will pull back down. I don't know. I still think gold may be pulling back down here if he wants to. Here to here is not far away, so we just accumulated for a few days before moving higher like this. Yeah, this is we are bullish. We're gonna buy and sell for sure. You know, we're gonna buy and sell for sure. But yeah, like I say, maybe GU will be much better. You know, if you are looking at, I hope you just keep buying from here, take out this high, then we can find opportunity to sell back down to this level. So now, why do I choose this level? From the weekly perspective, we have a fair value gap there, and we have this key level right here. Right here. This key level has not been tapped into. So that's why I know gold might be coming into this level. And I say gold, GU might be coming into this level, then continue buying those. I don't know where. I have this, I have this level for sure. I think GU is going to take out this level. I think it's going to take out that level. I know, yeah, structure, we took this relative equal lows and we are pulling back wise, but from the monthly perspective, if you go to the line chart, we did break above this high, fine. Let me mark this area out first. We did break above that high, fine. Which area? I'll mark that right now. Price has not really get to this level yet. It's still fresh, so price it's like that's why that area is very important. Price haven't gotten there. So right here, price can move towards to this key level right here. First, then react off there, pull back, then probably continue going higher. So yeah, this is area where if GU, whether you take a buy, say it doesn't matter, but if GU come around this level, look for your opportunity to go long with a confirmation. You can also take aggressive entry, like ready to willing, like you have to have certain amount you are willing to risk from this level if you don't want to wait for confirmation or something. This is 30 pips for sure. So that is your choice to like, okay, yeah, I'm willing to risk 30 pips on so this level and how much I'm risking on this. So this is it. If you don't want to wait for confirmation, if you are waiting for confirmation, it's also good to wait for confirmation around this level. So yeah. Any other question? Naima, you were talking about US 30. Is she here?
Hello? Yes, I'm sorry. I was trying
You
to
want to share your screen
unmute my.
or
Yes, sir, I can.
oh yeah, share your screen.
Yes, sir. Um, share. Okay, so I can start from the weekly. We broke the all-time high last week right here. If I go to the daily, there's like a minor retracement. But I usually take my trades from the 4 hour.
This is the daily, yes?
Um, yeah, but I was just going from just doing a top-down analysis. So we broke the all-time high, as you can see here,
All right.
and there's a fair value gap here. So if we want to continue
Selling.
to, yeah, then I would take a I would take a sell from here, or I would take a buy from here because there's a fair value gap here as well, right? Hold on, sorry. Like here. And the other place I'm looking to buy would be here. So those are my two areas. Sir?
It's very good. I mean, of course, you don't just buy like that. You always see confirmation before buying. So yeah, those are a very good area. But NAS is selling. So if I don't know
It's
because
divergence because I don't know what ES is doing, what the S&P 500 is doing, but usually,
I think it's also selling. I don't know. I haven't checked. I don't check that, but I think so. But yeah, okay. Yeah, this is good. Can you go to the weekly time frame? Let me just see.
yes, sir.
Let's see if it fails to close above the high. So this is the weekly time frame, right?
Yes, sir. Do I need to make it smaller?
I think I can see that it didn't close above that previous high. Yes? Yeah, that one.
Which one? It didn't close?
Like body, I mean, with body.
Let me see.
No. Turn on your magnet and stick a line on top of that. Yeah. Stick a line on top of that. Just pick a horizontal line. No, horizontal.
Oh,
Yeah, that one. Sticking on top of it, yeah. Beam. Yeah, it didn't close above it. So, which means, I don't know. Like this line you put, this line here. This one here, right here. You
are
want to
you
buy
drawing
from here,
on that?
yes? Yeah.
Are you drawing on it? I can't see. Oh, what'd you say, sir?
Do you want to buy from there, yes? Or what?
Yeah.
Wait, hold on. Yeah, there or here, to balance this area. It could be opportunity, like, maybe it will come like this, like you say, then come here and continue going higher, something like this. It could be a very good one, either this level or here, it could be a very good one to probably buy from. So yeah, it's okay. I think it's nice. Go to your daily again. Go to your daily.
Okay.
Yeah. it's pretty nice, you know. So this area is probably like this here, yeah, and you also have OC level, but yeah, it's very good. What you say is good. I think it can still it can just keep on pushing higher, but of course we need to calm down and continue like this. So yeah, it's not bad. It's a good idea, but of course you have to see confirmation. You cannot just jump in the trade. So go to your 12 hour. Let me see how this level will look like. You
There's a
see?
block right here.
Yeah. So that is why this area right here. If you go back to the weekly, go back to the weekly
Yes, sir.
and mark this candle out like this. You see, put horizontal rate there and change the color. Yes. And go to the daily. Still put the same
Or you want me
line
to go to
there.
12 hour?
No, hold on.
Huh?
Put OC level on this open and close level of that candle. Put another horizontal there. Yeah.
A long one
Yeah,
or
yeah,
just
yeah. Long
a
one, long
trend
one.
line?
Yeah, there. Correct. Now you can go to the 12 hour.
Oh, don't type OC level.
You just go to the 12 hour, yeah. You see? So, you know, these two level right here, they are very solid, you know. But well, if you want to sell it down, but if you just want to wait for price to come here and go long, yeah, it's fine, you know. And again, there is a fair value gap right here, just in case they want to use this flow as liquidity. But yeah, it's just something you have to also pay attention to. If you don't see any kind of confirmation to go long there, then you wait for price. Maybe you want to rebalance this inefficiency before going long. So it's just something you are right, you are doing something right, but like these two line might be like, you know, might not hold. If something want to hold here, it will be this here or this inefficiency here, you know. Then this could be liquidity. So it's all right. You are doing something right here.
Okay,
Yeah,
I
yeah.
appreciate it.
And
I don't know.
go
Maybe.
to your
Oh,
mark this inefficiency out. Just mark this inefficiency out with a rectangle. Mm-hmm. Yes, correct. You know. Mm-hmm. Yeah. And you can go to your 4 hour, it doesn't matter at this point. Yeah. So you can see right here, even this candle itself is a level, you know, which also begins from the inefficiency level. So, you know,
wait. When you say this candle, what do you mean? Because I think you're really good at reading candlestick theory,
so
and
this is a momentum candle, this is a balance, and this is a momentum. So this is a point of interest where institutional trader position again to buy this market higher. You know, when you see a candle like this, that is why, like this one as well. I know you are using the red one or something, but yeah, this as well is a candle, a balanced candle that price they place, you know, after this market was balanced here, now they step in again to push the market higher. Those candles, yeah.
also you don't use the last down candle before an up move.
Like you said, this red one, yes.
Mm-hmm.
Ah, like again, people are different, you know. Yeah, I can use it, but so why when will I use it? Now, this is when it matters. You see how this candle right here is the last one before the push up, right?
Mm-hmm.
Then I will use it. It's clear. That is a balanced candle before a push. Now, I don't want you to see it out, but if you draw a line across that top of that candle, you can see how this market came back down to balance that before we continue. Do you understand what I'm saying?
Yeah.
So you can see this tip of this line of this green candle of this blue candle tap into the body this candle wicks. That is, it balanced that candle before going higher now. Now, if you look at this candle and this candle, you can see the blue candle is much higher, and this is a balanced candle before buyer stepped in. So if price wants to respect this any of this area, it will come from this to this blue candle here and continue. You know, so that's why those are candles. They are like you know, they mean something.
So you don't have to go over today, or maybe you could just share some resources. I was studying about like candlestick theory, and I know I don't have to know it,
Mm.
but sometimes like when I see you marking up things, you mention certain things like an inside bar,
Yeah.
or you might say that okay, well this candle shows continuation, right?
Mm-hmm.
And so I just wanted to know like where I could start with being better. I mean, because I don't trade dojis or that's just not how I trade. I just trade
Yeah,
smart
yeah,
money.
yeah, yeah. Basically,
Um,
doji inside, but they are like accumulation, right? So
okay, yeah.
those are accumulation. They are all accumulation. So there will be a like market can just distribute next straight away. While sometimes we will need to manipulate before we distribute. So you can see all of this was just accumulation phase. Then you see how aggressive this candle comes, becomes the manipulation. Now again, what did price do? What I was saying, we can do like this, come like this, come like this, come like this, then before we go. Now you can see
Mm-hmm.
after price manipulate this area, I mean, you might use this as a point of interest, it doesn't matter. You see price didn't get there automatic, price push back up, what? From this balanced area before this aggressive. Why do you think it's aggressive? Because price, this candle was kind of balanced, then what? Momentum. What did price do? Price came there. You see how price reject that level, push down now again, where? To this balance area before this momentum candle. After price get there, what happened? Look at this green candle. This red candle becomes a however, like a balanced market there. See, then what happened? Price like push higher again, rebalance there, push, not so much. Then you see, that is when price just keep on. And if price again, that is why I was telling you, you should pay attention to this fair value gap. And automatically, you can see fair value gap now. We have what? This candle right here in this area. So this area will be very key. If price don't respect here, then it's coming for liquidity. Where is this liquidity? This low. People place their stop losses here, so they will run them out into this area. They will continue the price higher. So I mean, just for you not to be left out, that is why you have other areas, right? Well, sometimes you just keep, yeah, price needs to come here, come here, come here. What about if it doesn't come there before pushing? So it's good to have other area. That's why this area is very right and this area is very right as well. So anywhere price come, those your areas are also very, very right, because this area has this level. But the reason why I don't buy this area because we didn't take any liquidity before we push this leg. So this low will become liquidity. Do you understand what I'm saying? Whenever we have a thing like this, we didn't push
Yes, sir.
before liquidity, then the low becomes liquidity. But yeah, you can see there was no like after this push we have accumulation then push again, something like that. No, so it's just like a straight push. That is something that can become liquidity for this level here. So you should just watch out. It will be like a free thing for you, in this on US 30, at least for this week. Watch out for this level.
You talking about this level here, this one.
Yeah, that level is like I see this candle and there was a higher time frame fair value gap. So you should know it's a very good level. Trust me. If we're going to get there, and you have other level before there, so you will have to also watch out for these levels. So no level is wasted. When you see your reaction right here, even if it's a short-term buy, before price will come to this level to go all the way high, then yeah, it's still trading. So every level serve a purpose, whether for the short term or longer term, there is a purpose for them. So that is it.
So I just want to make sure that because I didn't mark it because I just wanted to Was this the weekly?
Go, no, I think this fair value gap is from the 12 hour.
It was from a what hour?
12 hour. Go to the 12 hour. I think this is where we get this fair value gap. But in this case, 4 hour gave you this candle. This candle is an institutional candle, like a balanced candle before an expansion. So it's like accumulation candle before an expansion. So what are you
So
trying
you
to
said
match?
this was the 12 hour?
Go to the 12 hour. It's a fair value gap there. Yeah.
I just want to mark it so that I don't, because you added some stuff and I just want to make sure. Um,
But
and
that
then
is
what was
this
this right
fair value gap start from here. So if you want to mark it out correctly.
here? Okay.
Use your rectangle here. That's it.
I do not like it shiny.
Mm-hmm.
All right. So why is this? I'm trying to turn it off. Okay. So
Yeah, there. That's it.
I just have to put it for me so I can remember what
Mm-hmm.
you said, the additional things that you said. Um, so the other thing, so do you think price could possibly break this? I mean, that would be very extreme. And it came down here.
To that candle.
Yeah,
Yeah.
to this
So
block.
basically, so basically, what is this thing? So basically, here to here is your inefficiency, right? So whether price come
Mhm.
down, fill it completely. Let's say, for example, we just came like this, fill it completely. Yeah, that's all. It's still the inefficiency, which means it tap into this candle. So it doesn't matter. It's all the same. But
Okay,
sure,
okay,
it will come here, whether tapping into the candle or not. This is the 12-hour inefficiency. You just have to pay attention there to look for your confirmation for you to go long again or something. And again, you can
okay.
see it's a balanced candle before a push, a balanced candle before a push. The difference now is that this did not take liquidity before this push, but this we did take liquidity, before
Uh-huh.
the push. Now, look, if you open this OC level, you can see this candle balance before this push. Now you can see that is where we came. See, that is where we came to push higher. So these are just something you have to pay attention. And you can see we did run liquidity before the break. So now we accumulate, we run liquidity before the break. But, you know, it's just something. 12 hour is good, you can be looking at it, but it's all the same, whether from the daily or something, you can always see something like this. Go to the daily, let's see how it looks, just to see how it looks at that area. You can see in the daily, you can see this low now will becomes that same liquidity we were talking about from there. But yeah, what is it again? This candle. So if you are to mark like the OC open and close level, which will be like this, or right here, it's all the same, but it's aligning with that same 12-hour inefficiency. And what if I told you if it doesn't use this OC level or this balance area, then it might be aiming for what? Liquidity. So where does liquidity lies? This low. So that is why it might now use, after taking the liquidity, now it might not trade into the what? Inefficiency. What does that mean? It rebalance the inefficiency for price to continue going.
Yes, sir.
Mm-hmm.
So these right here, I know the aren't these were my lines, so I know
Yeah,
what
yeah,
this
those are your
is,
lines. I didn't ask
but
you to
I
take them
don't
out. You can just watch how price react off them.
right. Do
Yeah.
you remember what I had here? Because maybe that's the 4 hour. Oh, okay, that's the 4 hour block right here. What is this? This was the open and close for the weekly.
I think from daily or something.
I didn't want to interrupt you. That's why I didn't mark them. I just wanted to do what you were asking me to do. So this was you said from the daily. These are the open and close.
So this one, the top one is from the weekly, but this one is the open and close is from the daily. That one there.
This.
Go to the weekly. Is the balancing of this candle. Yes. So price can just come and balance that candle and yes, you just put
That's the
weekly,
close.
yeah, or previous week high, but like it doesn't matter. But yeah, then this one is the daily. So it's just like a refining of this level. You can leave the open and close or there, but it's all the same. It's okay. You can just have them both. But again, price tap into there, look for reaction in your lower time frames. What time
Yes,
frame do
sir.
you trade with? Then go there. Don't be scared with those, those are just level, but once price get there, you can go to your time frame that you trade with to see whether you will see what you normally see before entering a trade.
Yes, sir.
Yeah,
Okay. Well, thank you very much. I appreciate the extra insight. Thank you.
you are very welcome.